Good afternoon, everybody. For those who don't know me, my name is Richard Betts. I'm the co-founder and head of content at Real Asset Media. And we cover the news, but we're less focused on breaking news and much more focused on insight, on analysis, on the kind of things, the investment strategies that are actually driving the market as opposed to reporting on what just happened. This is part of a series of events that we're running here at MIPIM. We also run the International Investors Lounge at Expo Real, and we do a number of events, around 50 or 60 a year. So this is part of what we do, along with 3 magazines, and the content from here, including your questions, if you would like them to be in it, will be in a write-up, which Jason, the editor, is doing just here. So this is a topic we've been following quite clearly. We're going to run through a series of things around both the challenges, the investment outlook, the strategies, and pick up on as well on the important element of energy within this. So that's me. My name's Richard Betts. Let's introduce the panel. Let's start with you, Stephan. So just a brief kind of, who are you and what do you do?
Yeah, well, thanks a lot. My name is Stephan Segbers. I'm the Chief Sales and Commercial Officer of RheinEnergie. RheinEnergie is a completely vertically integrated energy company from Germany, based in Cologne. And amongst others, we are active in the energy solution space. That means we are offering on-site generation, we are offering solutions for heating and cooling, and also do a lot of contracting work. So very happy to talk about data centers and energy today.
Great, thank you.
Hi, my name is Lottie Tollman. I'm the EMEA head of data center advisory at Colliers. So I'm 18 years into my commercial real estate journey and 4+ years into my data center journey, which makes you an expert actually with the pace that things are changing. Now at Colliers, the data center team offers a range of services through the data center lifecycle, all the way from powered land acquisition, disposal, the lease up of data centers, and the trading of operational assets, in addition to research insight and all of the normal real estate things you'd expect, like appraisal. So really glad to be here. Thanks for listening.
Good afternoon, everyone. My name's Rennie Dalrymple. I work for a company called Ridge & Partners, and we're a multidisciplinary consultant in the built environment. I head their data center division, so project manager, cost consultant by background. In comparison to Lottie, I've been in data centers since 1999, so that makes me a bit of a dinosaur. And seen many changes through that time when, let's say, a large data center was just a megawatt or a couple of megawatts, and now we're talking about huge campuses. So really exciting area.
Yeah, and fascinating to see those changes. Welcome to everybody who is joining on the live stream, and also if you're joining this on demand, thanks very much for joining. Let's pick up a little bit, I guess, in terms of the changes that we've seen, and let's restrict ourselves to the last 12 months, because we're seeing a lot of changes here. So I guess, how would you see that? Let's start with you, Lottie, just in terms of how you're seeing the changes over the last 12 months and maybe what that means for where we're heading.
Sure, good question. So beginning of last year, we definitely saw a return to core in terms of investment, particularly from the hyperscale group, we call them, which is the Microsoft, Amazon, Googles of the world. And by that, I mean that they returned to the safe havens of the FLAP-D markets, being Frankfurt, London, Amsterdam, Paris, and Dublin. More recently, we've seen emerging markets and newer locations coming into play because the grids in those locations are now so constrained that we've seen an increasing amount of activity across Iberia, Central Eastern Europe, and for the same sort of reasons across the Middle East. The dynamics of what the occupier wants has changed a lot, and there is huge focus from the neo-cloud groups on cost of power. They really consider total cost of occupation when they're making location decisions. So we've seen a lot of activity in the Nordics, a lot of the Chinese hyperscalers coming into Finland. And yeah, there's a lot going on, so hard to sum it up in a nutshell.
Great, and Rennie, you're coming from a different perspective, I suppose. So what are you seeing from your side?
To a certain extent, I'd agree with Lottie. Power, a lack of power and grid availability is a major driver, and everyone's looking for that unicorn of the powered land. I think over the last couple of years, with a lot more institutional investors coming into the space, there's been a real drive for big is best, trying to drive significant campuses at scale. Whether that continues, because those campuses are very large in profile, have a lot of planning risk and permitting challenges that go with them. So whether we'll see people kind of step back and try and tackle those headwinds in a different way, which means kind of going back to what was a large campus a few years ago, let's say around 100 megawatts, might, as I say, alleviate some of those challenges.
Great. And we've all mentioned energy here, which brings us to you, Stephan, really. So it would be good just to pick up what changes you've seen in terms of the demand side. And let's also move a little bit to where you're heading and where you think the industry is heading, particularly in terms of the energy side.
I think you both touched upon it. Grid capacity is the limiting constraint that we're seeing, that location decisions more and more are depending on the availability of power. And we're seeing, especially in the big European hubs like Frankfurt, London, that grid capacity is not available anymore. We often need to wait 5, 10, or even more years until capacity is available. And that means that the players in the industry are now more and more looking towards on-site generation and understanding what is the time to power, to reduce the time to power. Of course, also the cost of power. That's still a trade-off that we need to balance. But time to power has become the issue. Still, we have technical solutions available at hand. We can actually produce power on site, but there's a couple of regulatory requirements that we still need to deal with. For example, how do we produce green power on site? And also, how do we make sure it's affordable? But we are seeing that especially hybrid solutions with a limited capacity on the grid, combined or complemented with on-site generation or pure on-site generation projects, are being more and more discussed. And it's just a matter of time until they will be implemented, and not if they will be implemented at all.
And that's an interesting point, I think. Maybe let's pick up with you, Lottie, as well on that in terms of the challenges that we're seeing here. Power is obviously one, but what else are you seeing? Also the time, and does that, in terms of developments, and does that vary across Europe? What's your sense of that?
Yes, absolutely. So, power is the number one. We are a very, obviously, power-hungry industry, but permitting, government support, and also community impact is massive. There is still a lot of NIMBYism around data centers, a lot of misunderstanding and mistrust about, the water intake required, for example, which actually many of the high-density workloads can now be water positive, with closed-loop systems. So we're going on a big journey in terms of how we're perceived as an industry. I would say government support and permitting are probably the second one after power. In Central Eastern Europe, as some of the audience will know, you can get really tangled up in lengthy permitting processes. In the UK, for instance, the government launched the AI Growth Zones initiative, sort of yet to see exactly how that will, on the ground, boost sites. But for Scotland in particular, North Lanarkshire, it's looking like it's going to be really positive. So the ability of governments to be joined up to speed through permitting and to get communities on side is absolutely massive. I would say that's my number 2 to power.
Okay, good. And it might be interesting, Rennie, just in terms of how long it takes, from the initial concept to building it, whether that's what are the differences if you're building, a smaller data center versus the hyperscalers, because obviously that's an area that you're having to focus on a lot.
Yeah, if we sort of stick with the hyperscale type model for the purposes of this discussion, I think from firing the starting gun to having end user operational like a Microsoft or AWS, as Lottie's referred to, can be about 4 to 5 years. So you imagine the pace of change on the IT side. And I say that 4 to 5 years, there are a number of things. And again, Germany versus the UK all have slightly different ways of implementing that environmental permitting process. But again, in the UK, there's just not enough people in the Environment Agency to process these applications. So it can take like over a year to, outside of planning, to select your generators, have them all go through the technical submission process, and have an EA permit to say, yeah, they can operate at this facility. Yeah, it's at least 12 months, and that's going some in the UK. And I think there's a lot of places are going to start, if you like, copying and replicating. And it, you know, from a Germany point of view, their probably standards are more stringent than the UK. So I think we're going to end up moving in that direction.
Okay, good. And I'd be intrigued also, I mean, let's pick up with you, Lottie, and then I'll come to you as well, Stephan. But, you know, there's a lot of discussion in the market about obsolescence. You know, you've got logistics developers who are moving into data centers as well. Logistics in terms of that, it's unlikely that packages are going to get significantly smaller. But in data centers, of course, you've got, you know, new chips coming in. You've got a whole kind of technology really driving this. So how much of a concern is obsolescence, particularly from the investor side?
It's definitely a concern for investors. We've got, if we're focusing on facilities that are accommodating AI workloads, so probably different from cloud workloads, they are using the newest GPU sets, you know, normally from NVIDIA because they have 95% market share. And these are changing at such a rapid pace. Indeed, it's the conference in San Jose, is it later this week or next week? So no doubt we'll hear more announcements from Jensen. When it comes to investors, it's hard for them to underwrite this. And fundamentally, what we're seeing, particularly when it comes to the logistics industrial developers, is for them looking to exit at a powered shell stage. So the Prologises, the Panattones, the Segbers of the world, committing to build out powered shell data centers, meaning, you know, they are bringing the power to the fabric of the building, but are not concerned with the internal layout. And if you're able to deliver that with maximum flexibility for how your data halls can be laid out, then that is probably the best way of mitigating that risk of obsolescence. And that's because there's an increasing amount of modular fit outs for data centers. So long as the shell is okay, modular seems to be the way forward. So the other bit that investors sometimes struggle with is the underwriting position of neoclouds. So obsolescence from a different angle, from a, you know, financial underwriting angle, is hard. Many of these neoclouds have spun out of crypto mining companies, even those that are backed by hyperscaler agreements. Those agreements might be for 3 years, for 5 years. You still reach a pinch point in your financial modeling where you need to take a risk. And NVIDIA have now announced that they're no longer going to underwrite those deals. They think it's impacting their share price too much. So that will be, you know, from a financial perspective, obsolescence is probably as important as technical obsolescence for us at the moment.
Okay, good. Rennie, you wanted to pick that up, but and feel free to pick that up. But I also wanted to look a little bit at locations, what's driving those, and how we see that moving forward, particularly when we're looking at geopolitics. I don't know whether others have seen the news, but Amazon just reported that 3 of their data centers in the Gulf had basically been taken out by drone strikes. And that's an awful lot of investment disappearing in a very short space of time, but also must change the risk view in terms of locations and geographies, I would say.
Absolutely. Whether you're a hotel or a data center, getting hit by a drone is clearly not good. So, but again, in terms of looking at the developability of sites for data center use, I mean, security, integrity, physical and data security is, you know, top priority. It kind of can cause a few issues in the planning landscape because they're not particularly inviting. Kind of public engagement has traditionally been quite low. But yeah, I can imagine over the next few weeks and the coming months, yeah, people's data center plans in the Middle East will be under review for sure. I just wanted to come back on one of the points that Lottie mentioned. I mean, right now, I mean, in terms of we're working on some schemes for some of the companies you just mentioned, and end customer specs are just evolving all the time. So it's a real challenge to blend that sort of what goes into the built asset, not over specifying that, not too much flexibility, because that costs more money to provide that. But it's yeah, a real challenge where specs are changing almost by the month in terms of what end user customer requirements are and how they see densities and computer workload changing in the coming years.
Okay, good. I'm going to pick up with you on the location side, Stephan. If you've got anything on locations, feel free to pick that up as well, Lottie. Obviously, power, a key element to that, and energy. So you're looking at it both, I guess, from talking to cities as well as the developers and the investors around it. So how do you do that? What's the complexity of it? Are you having to balance the grid? What's the situation?
Yeah, well, strictly speaking, developers or even tenants at the end of the day, they want to buy green power. They just want to have access to green, cheap power, and they don't want to get involved with any complexity that stems from the energy market. And since we're seeing that grid capacity isn't available anymore, they are looking to find partners, seeking to find partners that are willing and able to take away the complexity of producing power on site and providing this green power. So that means we are now working in an ecosystem where an additional player needs to be part of the conversation from the very beginning, and that's energy. Because if you don't have power, you will never be able to develop a data center. But the other complexity that has arisen from the energy efficiency law is that you also need to basically do something with your heat. So you need to deploy a certain percentage of waste heat. And often what we're seeing is that there is a mismatch where power is available. That means in the more rural areas, we don't have any demand for heat. Whereas where there's the demand for heat, that's often in the more urban areas, we don't have power available. So that's something that we also need to balance. While there is light at the end of the tunnel, in the sense that apparently also policymakers have understood that this law is basically destroying the industry, that we are going to see a revision of the energy efficiency law. But it means that location decisions, may it be due to geopolitical reasons, and I think there's a lot of capital now flowing also from the Middle East into Europe, because capital needs to be deployed. And if they can't deploy it locally, it needs to go somewhere else. So it's geopolitical stability, it's availability of power, it's demand, it's proximity to also internet hubs. But it's also especially the availability of power. So it means the location decision has become a very complex and also key decision at the very beginning of the process. If you make the wrong location decision, you're never going to see the data center being built at the end of the day.
Can I add?
Yes.
Can I just add something to the location point as well? Because I think AI workloads have opened up new territories, and this is because AI workloads do not need high speed, so it's low latency is okay, and that's why some of these giga campuses that we've spoken about can be located in far-flung places where there's excessive amounts of power. However, on top of the reasons that you just stated, there's a real problem about access for skilled labor, and the demand now for really credible operational teams, for engineers, is super important in terms of where you place your data center. You don't want your staff to be commuting 3 hours plus a day. You don't want to be in the middle of the woods in Finland, ideally, but unless you're near a big cluster where it makes sense. So there's a bit of applying some common sense to these locations is absolutely a factor as well. We're not in the middle of the desert. We're not in the Outer Hebrides. The locations still have to make sense for very human reasons as well as technical ones.
Okay, good. Yeah, go ahead, Rennie. Yeah.
And lastly, from a location point of view, in the background, that's kind of invisible, that you have AWS's, Microsoft's actual networks, which are generally, in a Microsoft sense, are called availability zones. And change those and expand on them costs that organization hundreds of millions, if not billions of pounds. So again, all of those things, the real estate, the construction bit, the planning, the property, the people, all goes hand in hand with rolling out and expanding those networks, which are demand driven as well. So there's a lot of, as Stephan was saying, there's a lot of moving parts sort of go in the background rather than just going, right, let's just put some data centers up in, I don't know, some far-flung area, because there's a lot in the background on that IT side.
And in terms of the demand side, interested to know what you think we can learn from the US, obviously, which is ahead of the market here in Europe. Are we going to? Is it comparable? Are there differences? Are there innovative solutions there that we will see here? What's your take on that? We can pick it up from energy first if you want, Stephan, because I know you were recently in the US as well, I think.
Well, every once in a while, of course. What we're seeing in the US, and I think we just need to look a bit at the prerequisites. The US doesn't have such a stable energy network. So that means they always need to look into alternative energy sources, because from the grid you don't get that, reliability. Gas is much cheaper in the US. That's also a relevant factor. And there's also subsidies in the US on on-site generation. So what we're seeing in the US, that on-site generation is being deployed all over the place already. Let it be fuel cells, let it be CHPs. But we've also seen that nukes, so nuclear power plants, are being reactivated to produce a massive amount of energy, clean energy. And I think it's just the determination and also the courage and the willingness to make these things happen. And then they are balancing the question between sustainability and availability of power in a different way. So they are more interested in having an economic upwards trend than protecting the environment at all costs. And what we've seen in Europe is, for a long time, we have been so much involved with sustainability that we have somehow also hindered the business in scaling. And I think that's something that we need to reconsider, because at the end of the day, we need to, address both dimensions. And I think that's possible. But the good thing is, US demonstrates that there is technology available. There's on-site technology available that you can actually also operate at a very good cost. And I think that's something that we also need to do in Europe at a better scale.
Okay, good. Lottie, and also I suppose, in terms of the demand side, how exponential is that growth, and where's that going to be? Is that going to be in the smaller data centers, in the hyperscalers? What's your sense of that?
Good question. So it's still continuing at pace. There was massive investment into data centers last year. It's the first year that capital raising for the sector eclipsed any other asset class, so higher than multifamily for the first year ever. I know the house builders are kind of on their knees as of last week with share prices as a result of conflict, but sorry to rub it in. Data centers are, the story in the house at the moment. In terms of where it will go, don't see any sign of it bursting. I look around the room, and I will never encourage you during one of these talks not to be on your device. Thank you for continuing to drive traffic to data centers. Send photos of your brunch to your family. Please do it. It's continuing at massive pace, and I think the only way is up. I don't see it stopping. In terms of size, the current requirements in the market from both cloud operators and neo clouds, so that the AI type companies, seem to be no less than 5 megawatt deployments apiece. Ideally, we're seeing a lot in the market at the moment for 20, 25 megawatt type requirements. And that's really solving for what we call inference. So this is providing really highly connected cities. 5G and the rollout of that plays a big part in this. If we ever want to have driverless vehicles, we need a really integrated network of small sites, as well as the big giga campuses. So growth in all areas.
Okay, good. Rennie.
Yeah, and I think it's going to be a lot more evolution than revolution. I think a lot of the centers we're building are going to be equipped and adaptable for, let's say, that neo cloud. And I think there's going to be a call and a blend of both the big campuses and the smaller deployments. Let's say 6 megawatt building blocks tend to be the foundation at the moment. So it's any multiples of those.
Okay, good. It would be interesting. We've got about 5 minutes left. So just quickly, does anybody want to have a risk at saying how big the market is potentially going to be in terms of investment volume? Lottie?
I'm running out of zeros. I honestly, I don't know what the answer is. Bigger than we imagine it will be, I think, is the short answer. But in terms of actual figures, I can't put a number on it. Can you?
No, I can't, but I fully agree. I don't think it even matters because it's going to be so big that there's it's very difficult to satisfy that demand within due time. So I don't think that we have to worry about demand at all.
Okay, good. And Stephan, you mentioned just briefly about the investment side in terms of on-site energy, for example. How does that work? Because are you supplying that and the investor is paying for it? Are you co-investing? How does that actually operate?
Well, in the conversations we're having, we're generally seeing that developers, operators, and tenants don't want to get involved into energy if they don't have to. So if possible, they just want to buy green kilowatt hours. And that means what we are offering is that we plan, build, operate, and own the energy infrastructure, and we are then selling to the data center green kilowatt hours. Of course, you need to have space on site then, but the investment is being done by ourselves in the sense of contracting, and then we have a long-term offtake contract with the tenant that will buy then green kilowatt hours. And if possible, you combine it even with heat usage, then it gets a bit more efficient and also more affordable. But the investment is being done by us in the sense of contracting, and then only kilowatt hours are being sold to the tenant or the operator.
Okay, good. Does anybody, just before we finish, I've got one last question, but does anybody have a question that they want to ask? If they do, now is your time. You do. Very good.
Hi. Just a quick question to you regarding your business model. Does it work with large data center operators, whereby you build the entire infrastructure, energy infrastructure on site, and then you will bill it back as a kilowatt hour? Does it work?
Yeah, well, it works if you have a long-term offtake contract where then the tenant or the offtaker guarantees that they will offtake a certain amount of power over a certain period of time. Because otherwise I won't be able to amortize my investment because it's the exclusive offtaker. So I need to have a very firm contract with the offtaker. But in theory, it doesn't matter because it gives also, a lot of predictability to the offtaker, and they don't want to make the investment. So yes, it does. But what we also have to admit that yet, operators and developers are still a bit hesitant to invest into on-site generation. But we believe it's a bit like the domino effect. So if the first FID is being taken, then it will start, falling. But yes, it does work.
Good. It would be a shame if it didn't work, wouldn't it? That would be. Last one from me, and thanks for the insights. It's been fascinating. We speak obviously, as Real Asset Media to both cities and regions and countries, as well as the developers, the investment managers, and the sources of capital. So I guess, what would your message from MIPIM be to them in terms of data centers, the sector overall? How should they be involved?
I think, as we said a minute ago, the demand is not going to go anywhere. It's only going to increase. And I think, as we touched on earlier, I think the model for investors is evolving, a lot more yield on cost. So I think, to Stephan's point around longevity with some of these assets. So I think from a risk perspective, a lot more clarity on long-term revenue. It's the exciting place to be.
Great. Lottie?
I would say make it easy to do business in your region is, the best advice. And for investors, be flexible about the parameters you're looking to work within. So this sector is all about speed. It's all about speed to market. And the locations, the operators, the investors that win are those that are going to be the most flexible, agile, and the most aggressive. From a community, regional government point of view, that means being at the table, being open to finding sites, facilitating conversations at the right level, ultimately.
Great. Stephan?
Yeah, I don't want to repeat that, but I think data, AI is going to be the future, that's for sure. So if cities, if communities want to be part of the future, be there, make it happen, make it easy, because if you are not, then you're going to be out of the game sooner than you think.
Great. Really interesting. I'm just going to pick that up whilst I... If you're interested also in the energy side, Jason here has written a piece in the current issue of Insight, which looks at power, energy, how that's influencing what we're all doing in the sector across that, but also data centers as a key element of that. Thanks very much to everybody for being here. If you're interested in this topic, do contact us, follow us on LinkedIn, and we will, because we're writing a great deal about these topics at the moment. Thanks very much to the speakers for your time today, and thank you to the panel. Thanks, everybody.